Are you scared to lose or have lost your hard-earned money in the stock market? Do you consider stock markets as risky?
अरे हाँ भाई हाँ.
Then this video is for you. This video will be an eye-opener for you, so watch the video till the end. Let's get started. Namaste everyone, welcome to today's video. I am Pooja Sharma. In today's video, we are going to know whether stock investing is gambling or not. American author William Feather had famously said, "The funniest thing about stock market is when a person buys and the other one sells, they both think that they are being astute." But does that mean in stock market when people buy and sell, either has to lose? Well, that's actually a good question. What's the answer, you ask? So the answer to this good question is that no, not necessary. Unlike gambling, in stock market, that's not the case. Now you'll ask me, then what is the case? Let's understand with an example. Suppose a person A buys the shares of Reliance Industries at rupees 50. I know that's practically not possible today, but this is just an example. So yeah, suppose person A buys the shares of Reliance Industries at rupees 50 and sells those shares to person B for rupees 100, thus recording a profit of rupees 50. Now this person B, who bought the shares at rupees 100, sells these shares to person C when the price of the share reaches 200, thus recording a profit of rupees 100. So you see, everybody is in the profits. And this process continues as long as the fundamentals of the companies are good and the investors are getting good returns on the money they invest and for the time they do. So you see, investing is not like gambling, because when you invest money to buy shares of good companies, the overall wealth of the economy increases, while gambling just takes the money from the loser and gives it to the winner. That's just how simple it is. Before the 1990s, the stock market of India lacked a competent regulator. In those days, there were no powerful regulatory bodies that could regulate stock market dealings. Moreover, there was also lack of centralized or digital system that could regulate the stock trading. It was as good as imagining our banks to function without a centralized regulatory body like RBI. Speaking of RBI, do you know how RBI prints money and controls inflation?
नहीं.
Don't worry, do check out the links in the I button. You will find these videos helpful and knowledgeable.
Okay.
So yeah, coming back, where was I? Yeah, I was telling you how it was imagining our banks to function without a centralized regulatory body like RBI. On top of that, there was no technology to verify the market news. So every misleading or genuine report would result in sharp stock prices fluctuations. And in the quest to make more money, poor investors would get trapped every single time and ended up losing lots of their hard-earned money. Such incidences brought a negative perception about the stock market, which, by the way, my friend, still persists even after decades. On April 12, 1992, a regulatory body, the Securities and Exchange Board of India, was formed. SEBI, the central controller of stocks in India, was a boon for all the stock traders as well as investors. SEBI as a legal body started working in the interest of the investors. SEBI barred unfair stock trading practices soon after it was formed, and it took over to play a protective role in streamlining the investment practices. Soon the National Stock Exchange (NSE) was formed to make the functioning of stock market democratic and transparent. With all these regulatory bodies operating under the legal framework, the stock market trading became fair and reliable. Though manipulations may still happen today, but still there is ample room to create huge wealth through legitimate means. Thus, it would not be wrong to say that stock market is a safe place if the investments are done with the right intent to invest in good companies rather than getting involved in gambling for quicker profits. Let's take a look at the last 30 years performance of Nifty 50 and Sensex. In 1999, Nifty 50 stood at 890, as you can see in the graph. 20 years later, today, the Nifty 50 stands at close to 15,890 or 15,700 approximately. Similarly, if we check for Sensex, in the year 1990, it was around 700, not even 800, and today it is standing at 52,400 approximately. So we can say that if the investor has the patience to see through these small corrections in the market every now and then, or even the major one like the one that we saw in March 2020, and he stays away from intraday trading and futures and options trading, and he only invests in good businesses, then he is bound to create long-term wealth for himself and for his entire family. So to conclude, no, stock market investing is not the same as gambling, but trading in stock market is gambling. In the next video, we are going to see why trading is not a zero-sum game. If you like this video, give this video a thumbs up and help us reach more and more people. Also, don't forget to show this video to your parents and also your friends who are not aware of this, that stock market is not a gamble, guys. This video will actually be an eye-opener for them. So make sure that you make them sit and watch this video. Until then, namaste, bye-bye and take care.